You just have to like be sure of what you are doing in the market before you actually take the trade. And one thing that makes things easier to be able to take trades that are right is discount premium range. In fact, when I was taking this trade, I didn't even use discount premium when I took it. And that was because I
Okay.
was already observing this zone and I saw all of this happen. I saw all of this happen and all of this happen. So using discount premium, makes it easier. You're able to check that, okay, I'm in the right place and price can move up from there. So that's that for that. So let's go to imbalance, yeah. All right. I don't think gold will be a very good example for identifying imbalance because there's a plenty lot of imbalance on SAU right now. A plenty lot of imbalance. A lot of imbalance. If you look at this, can you hear me? Can you hear me? Can you hear me loud and clear?
Yes, very well.
Okay. So if you look at this, you see that there was some level of imbalance here. Usually imbalance come from when we are unable to balance price action. Something like this to this to this to this to this. If you now see price just keep on going up and up and up and up, you just see price going up and up and up and up and up without coming back to retest anything. It's not coming back to retest, it's not coming back to pull back, it's not coming back to do something like this to continue. Then in all probability there's an imbalance. Okay.
Yeah.
So in all probability there's an imbalance. So what was happening? So in all probability there's an imbalance. So in this situation too, we also have an imbalance because price did not even come here to come and tap anything. And we had some supply here. We had some supply here. Price was able to push through them. And the price came down into this zone. Am I teaching you to understanding?
Yes, I'm following you.
Because
I'm not
I
getting.
have this problem of explaining. I don't know how to explain properly. I don't even know.
Yeah, try.
I don't know. I don't. Well, I know I'll get better, sha. So
Yes, I'm good.
price tapped into this place as demand and then moved up from there. And this one went up, took this high without coming into demand. So we now have this one as inducement. May not be like say I dey teach myself.
No problem, sir.
So we now have this one as inducement. And so possibly price might come here, up here, and then keep on going. So that's just the thing is price moves in higher highs and higher lows. I think you understand that already.
Yes, yes.
So if price begins to move in just higher highs and higher highs and higher highs without any higher
Interest.
lows, then you know that things are not balanced. Things are not balanced. So um somebody whose class I was in today was like XAU has been moving and moving comfortably like this because of the fact that um it has been able to create its own structure. All of this structure here, the higher highs and the higher lows. So this low was here, price took it out. So this one became a new low. This one became a new low. And then from there, we went high. This one broke structure. What was that? This one broke structure, and now we have a new low, which is this one. So we went there and took that. We took that. Coming. Took that. So from here to here, here, to here. Then when I did this, there was an imbalance here. Can you see it? This is the low that took this one out. I hope you can see my screen.
Yes, I can see it.
This is the low that took this one out. So after taking it out, price did not come back to touch it. There was no
Yes.
touch initially. And so there was plenty of imbalance. There was plenty of imbalance around there. And what we were expecting is that since price has decided that okay, it's going to use this area as a area of interest, because why? We have shifted from this place, in this case to here. And why are we shifting? Because of the fact that there was a big battle around here. And after the battle was fought, we can see that buyers were the ones that won. That is why I said about shifting your POI can change your area of interest, or AOI. You can shift your area of interest from a particular demand area to another demand area. Once we broke this one became a candle, and then all of this one tap, 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 tap into it. This one swept this, tap, 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 and went up there. And when price got here, it not even come back here again. It just went and continued going, went as high as that, and took all of that. And so price now had to come back into this place, because without this one will not exist. The rest of them will not exist. And so it has to come back to the source and pick up from there. So uh, that was what price did. We still even use the same place because this one did not touch it completely. So we had that. And then from there, boom, boom, boom. All of the leg that sponsored
Yes.
this one that I was taking trade from came from here, came from there. So that's the imbalance, yeah. The balance is when I hope you have a very good understanding of supply demand already.
Yes,
Or
sir.
do you think I should explain further?
I I have an understanding. But
Okay.
I think I should use more examples to explain. I will master it better.
Do you see this area? What's happening
Yeah.
here?
There is
What's happening here?
in this area there is this is supposed to be an area, a good area for supply.
Of what?
Because but then you notice that yes, that's what is happening. This is a good area for supply, and that's
Okay.
why the other the other place had to go back to touch it in order to continue supply. But we noticed that since there is already transfer of a demand, that's a demand zone, a very good demand zone. That's why uh, uh, we had to liquidate the supply. So that's how
Okay.
we.
That's a very good one. I like the progress you are making. So we've had all of this rejection here happen. This one just boom, all of this telling us that sellers were in this market. And so this was the first representation. This was the representative, the ambassador of suppliers. So it was the one that swept down and all of this one. So it now became the one that all of this one were rejecting from. I'm just showing you an example of what supply can be like at times. So this one was now all of these were rejecting from it, were rejecting from it, were rejecting from it, were rejecting from it. So we had supply in this zone. There was a supply that was here before. Okay. There was a supply that was here before. And then after this one tapped and fell and did all of that, this one became the next one. This one became the next one.
Yes.
And so that became the area of supply for these guys. And they were rejecting, 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 rejecting until they were able to break through. Price went up from there. So if you look at, I think we did this example in the last class, something similar to this. Now, if you look at something, you see that price has been coming from this demand here. Price, this one already swept this low. I was able to come up here, tap into that zone. And this kind of rejection is telling us that buyers are heavily involved in the market.
Market.
The fact that they were even able to continue despite overcoming these people tells us that, okay, yeah, buyers are ready. Because a week like this cannot be created if there is no heavy buy volume. Sellers were
Mm.
ready to sell already. They were
To
really
sell.
ready to sell. They were coming down
Yes.
heavy. Something like this could have been replicated. Something like this could have been replicated here if buyers had allowed it, but they did not. So immediately they sold down here, they bought back, and so they continued from there, and they were able to buy that. And now we now see that price after that came into here. Price came here, and then this one after tapping, it went up there, was rejected. Price tapped there, came down, swept this one. Probably was using this one as inducement, but I don't see a reason why I should use it as inducement. But the low was taken, it tapped into the demand, which was this. I keep forgetting I've moved my, let me just put it here. So it tapped here, and this one became the next demand. So from there, we went up there. You know, we see a continuous progression of demand areas, demand zones. So price moved up from there. We had this one, didn't really tap into the demand itself. Went up there, swept all of this ice, swept all of this ice. And I hope you are already reading the book.
I honestly have not rejected.
Okay. If you can read it, you'll be able to understand a lot more of what I'll be explaining so that you don't get confused. So we had price do that, and then we had this one as another block. Another block is like the last red candle before a buy, a full-time buy, or
Okay.
the last green candle before a full-time sell. In this kind of situation now, you say that this is another block before all of these sell. And you say that, okay, probably price should sell from here. But it doesn't, because we now had to change our perspective and see that, okay, price was rejecting from here. And so that means that the supply is here. And then we saw that, okay, price was rejecting from here too. So the next supply is here. So this one now, we saw that there was an inducement and price had not touched it. And you know, they tried to sell here, but they bought heavy. And so this one was able to go high and take the highs. So from there, if you wanted to pick your entry, you could put your entry inside there and then you buy. So that was that one. I think this one will have been 3 hour, if not more, no more than 3 hour. Maybe more. Okay, it was 6.43 RR. Do you understand the concept of risk to reward?
When I listened to one of your videos, I I saw a top down analysis, and
Okay,
you explained TRR that you would have gotten on 1 week.
time frame.
But then when you moved on to 4 day,
4 hour.
I mean sorry, 4 hours, 4 hours, it's increased to six, which is six reward, six reward. So
Yeah. I think I explained risk to reward in the video.
yes, sir. Or risk to reward. But how does it really? Okay, yeah, you said if it's 3 hours, if you put in $10, you're going to get $30.
Yeah.
Doesn't mean if it's 6 hours, if you put in $10, you get $60.
Yes. No probability. So
Okay.
that's just the way it works. And it works using this. Although this thing is subjective, but it works objectively in some certain ways. So it just depends on your entry to your area of take profit. So
Okay. So does it also mean that if you keep lowering the time frame, let's say to 1 hour, 30 minutes, your risk to reward will increase?
um if you have a zone of interest from maybe like 4 hour and you say you want to get a better entry because you have to refine your entry so that you don't risk too much. So you can go to like 30 minutes, then you find a very good and better entry there. And that means you reduce the amount of risk that you use and you get better reward for your trade. So that's just the way it is. If you are buying something on weekly, you'll be using far, far, far greater risk than you will use on 30 minutes. Because buying something on a weekly time frame and you put your SL, maybe like you have a 3 hour trade on the weekly, it will if you put $100 in that trade. Let's say you have two separate trades. You take a trade on 30 minutes, you take another trade on weekly time frame, and you put $100 on both trades. The thing is, for your weekly trade that you took, your risk, the amount of risks you'll be using, if it won't be taking the whole of the $100 safe,
Hmm.
but the reward you will have, your reward might be going to maybe like $1,200 or something because of the kind of time frame you are using. So if you now go to like 30 minutes, your risk in that kind of trade might not be anything more than maybe 10 or $20. And your reward might give you maybe like $600 and if not more. So
Really?
that's the way it
Okay.
works. On weekly is like the biggest, one of the biggest muscle. We still have monthly time frame. We still have monthly time frame. So we have 1 month, there's 3 months, there's 6 months, there's all of that.
Okay.
Where is my chart? Where are thou?
So, so this doesn't work like
So
leverage. I've heard something of leverage. How does that- so this one is, it does its own percentage like this.
leverage is a different matter altogether. Leverage is a different matter
Okay. This
altogether.
one is just normal. This one is normal. No leverage
Yes, this
attached.
one is just your normal kind of. Anybody who is a trader, they have to make use of short and long position. Any trade they are in, everybody's trading rule has to go with something or the other. And that means that myself now, I said that I can't go anything below 1 3 hour. I was taking this trade this morning and I was looking at it. I was like, okay, where should my position be? When I had analyzed and saw that okay, there was a demand around here and all of that, and then we had all of this happen, I was like, okay, we might still have an interesting something here. We might have something interesting on this one. I was looking at it, I said, should I buy from here and put my risk here, or should I put my buy here? and put my risk in the same place. So I was just like, I don't think I want to risk anything more than I need to, because I saw that the place where I was going to take my target where I was going to get out,
Yeah.
I saw that the place was I saw that the place was around here. And the good thing about my trading plan is, if my target is saying that I'm not up to 3 RR, I cannot take that kind of trade.
Oh,
So when I saw it, I was like, okay. Initially, this was where I put my target,
okay.
because your target must be objective. It must be around where price should be heading, not where you want it to go to, because it will not always go where you want it to go.
That's
So I
true.
was looking at this place as my target before. If you see the before chart, the before of the trade, you will see it there. So I was looking at this. So I saw that, okay, my whatever has changed. My entry has changed because I now had to take entry here. I now had to take entry here because this one too tapped into the demand zone a little bit and then kept on moving. So this one was now the inducement. So I felt like, okay, let me put my entry here. And when I put my entry here, my risk has to remain the same because I don't want to change my place of risk, because price should not get to this place. So that was why I put my risk there. And from there, my target. So I now had to adjust my target from here to here. So I had to adjust my target from here to here because I knew that price in all likelihood will still get here, because we have all
Mm.
of these rejection. So there was a supply around here. And beside, we are still in discount. So we are still in discount. So I was able to like take it here. And so that was where price went to. It took out, it got to that level and then turned back. So you see that the trade is no more than 3 RR. It's 308. You see it? Next to reward. So it wasn't more than 3 RR. It wasn't more than 3 RR. That was just it. So
Is there a place you? Is there a place they show the three, or you calculate it with the?
is there what?
Is there a place to show that 3 RR for you to know that it's three or less,
Yeah,
or you
whenever you
calculate it
touch
by yourself?
this stuff, whenever you touch it, whenever you touch sorry. Whenever you touch it, can you see me? Okay. Whenever you touch it, you'll be able to see the information there.
Okay.
You see it? So this one says 3.08. You see it?
Mm.
It says 3.08. That's risk reward ratio. So this was close PNL 144.5, quantity 5, risk reward ratio 3.08. So that's my risk to reward 3.08. Now, if I increase my target, it can get to like maybe 5 or 6 or 7, depending on where I take it to. So
Okay.
it will always tell me. It will always tell me. I hope you can see it.
Well,
It's
it's
not so
not
clear.
very clear, but since you have said it and you showed me the area where I can always
Yeah.
read the details, so
I don't think it can be enlarged. Yeah. That's the problem with trading view on this short position. Cannot enlarge it. All right. So where were we? Where is my gold chart? So about imbalance. Do you understand the
yes, I do.
balance, or should I explain further? I've even wanted to digress to supply and demand. Yep. So I've even want to digress to supply and demand.
Yes, we can digress, and anytime we see any imbalance, you can further
I
frustrate
don't
this
want
point.
us to waste too much
Because
time because I still have stuff to do this evening.
okay,
So
okay,
yeah. So there was this supply here too. The supply here, price got here, but ongoing, kept on going, kept on going. There was something here that was fueling this thing, some kind of demand. I think it can be found here. There are some levels that would seem like, where is this person drawing this thing from? I know you get there soon. This buy,
yes,
price not from there. I saw this one yesterday. Today is Wednesday, yeah, it was yesterday. Somebody took the buy, but I didn't take it. I wasn't focusing on gold. Price much from here. People will give you different kind of English. So somebody calling it IOFED. Well, demand na demand. Demand na demand. Wetin be
in
IOFED?
fact, but to be very honest, that lady's video you sent to me. So I started watching that video. She started throwing a lot of grammar. I was like, all these things.
You
When will
know,
you
she
take for me
doesn't
to digest all
she
of them?
doesn't teach newbies. And even myself, I'm finding it difficult to even teach newbies, but I just have to try. So that's the kind of terminology she uses. We have been so used to this term because it's not 1 year that we've spent, it's not 2 years we spent, not 3 years we spent in this industry. So you come across a lot of terms. And
Yes.
when you just say it, it will just be like you are a doctor and so you are just
Mm.
speaking medical grammar and
It's true.
somebody will
It's
just
true.
be confused. So
It's
that's
true.
just the way it is. Okay, so let's just talk about imbalance and breakup blocks and let's wrap it all up. So let's not
Okay. Okay, sir.
I do not waste too much time. So balance will occur whenever price is unable to balance particular structure. If this cannot occur in a normal setting, although normally when price moves, it usually moves like this. The drawing will be awkward, but still, you use it like that.
Yes, you have, you have shown it
I
in
think
one of
I
the
explained
videos.
this in a, is it price
Yes.
action? Or okay, I explained it in the market
Market
structure video.
structure.
So a price, all of these things that look like a art drawing. So a price cannot move like this. The price cannot move like this. Move from one zone to another, to another, to another. All of this price action happening here, then that means there is a big issue. So price has to be able to take some internal liquidity, internal range liquidity. Price has to be able to take some internal range liquidity. And what do I mean by internal range liquidity? I mean some of these particular things that are happening here, they are highs and they are lows. And so at some point, price will have to take some out to be able to continue. So that is another form of liquidity, internal range liquidity. So when internal range liquidity is taken, most times price can be able to continue to take out an high or a low. So all of this one, you see highs, higher highs, higher highs, higher highs inside of them. And there's still this
Yes.
main structure. This one that goes like this, that goes like this. But
Yes.
all of these
Yes, sir.
ones are happening inside. And so when price wants to move to take out this particular thing, sometimes it will have to, in fact, most times it will have to take out a low. So all of these ones All of these that were here, they were internal liquidity. All of these internal liquidity, and then it came here, and then it bounced and moved up from there. So whenever price is unable to take internal liquidity and it just moves up from there, then there is a serious imbalance. Let's say, for example,
Okay.
price just starts moving like this. Just went like this. Not even touch anything. All of this one. This one I do. So all of this one, let's say all of this. Price did not take anything and it just started to go up. At the end of the day, price will have to come back and sweep this low. Shall you see it now? Price will have to come and sweep this low. Price will have to come and sweep this low and take some internal liquidity around here and then continue.
Okay.
Because why? There was an imbalance there. And so price still has to come and take internal liquidity. It has to come and take internal liquidity. If internal liquidity is not taken, it will cause an imbalance. And so that is why this one was taken. That is why this one was taken. Because
Okay.
price should have moved like this. Price should have moved like this. But it didn't. It didn't. So that was why we did that. So that's just the major concept of imbalance. If you see it on lower time frame or another examples, you see what I'm talking about. Now let me just show you an example. So we have price creates this leg. We had price create this leg, this particular leg, do it from here to here, and down here. Here. Screen is not wide enough. So we went like this. So if at any point it had occurred that as price was going, as it went here, you saw that it just started going up and going up and going up and going up and going up. So that price was going up from there. It didn't even turn back. You see it. Came from here to here
Yes,
to
I've
here.
seen it. Without coming back
uh
to take the
And
internal.
then it just went up and up and up and up and up and up and up. All of these things that this thing is doing is just internal liquidity. All of this. It's just like all of these small ones that are here, that are on this leg. That's the way this one is behaving. Because why? It does not have any major structure. No particular leg is holding it. You know, I was talking about the side of a triangle or something like that in one of those videos. So like the
Yes,
side of a
yes,
triangle,
yes.
this one to here, then this one to here,
Yes, sir.
this one to here, and then this one to here. So something like this is what gives markets a very good skeleton. So if this skeleton is
Yes.
not there and it's just moving like a fish inside water, then that means there is no real structure. There is no real structure anywhere. So most times price will have to come and take out that liquidity. This thing that will happen on this one, it might take months, it might take a full year, it might take years before it will come back and come and
Mm,
tap inside here. For it to come and tap inside here to say, okay, oh, we are ready to now go and move and to go and move and completely go and continue our journey. So That is why I said that sometimes you have to work with what you have. Sometimes this past week now, anytime I took any trade on good, I took it with the fear of God because I don't want to make mistake. And the thing is, we've not had anything that price should take. In this kind of place now, we had this structure year to year. Okay, we had this structure year to year, and we know that okay, when price moves from here and all of here and all of here to go and take out this high. Well, in this case,
Yes.
for this particular price action, we don't have anything like that again because we are now at the highest high that gold can get to so far.
Yeah.
And so you now have to like project where your target will be. Your target will be inside your head, inside your mind. And so if price reaches your target, you are lucky. If price does not reach your target, you are in trouble. So that's why I said that if I take any trade on
Mm.
it, I take it with the fear of God. Although this week I haven't really taken any trade
Yeah.
on it, but still, it's important to like this particular one now. Taking any trade here, you have been required to think of where your TP should be. So, and let's say myself, I use 3 RR, minimum of 3 RR. I put my 3 RR here. When price got there, I was lucky to have my targets hit. But it is a very risky stuff to do. So if you don't have money that you want to
Yes.
like dispose in case of anything going wrong, then that would be trouble. All right,
Mm.
so that's what we have. Now for breaker block. Okay. In terms of breaker block, we can say that breaker block occurs when we blow through a particular supply. The price uses that area of supply as uh, as a new demand. So breaker block just simply means that it was the one that broke through the supply. Now let's use this example. For example, now we have this one, all of this supply that was here, all of this supply that was here. There was a supply that was here, and this one now contracted its own supply from all of this here. Now use the supply to come and terrorize these people here.
Yes.
So it was nice to terrorize them. So now when price now came down and broke, there was this break here. This was where it broke first time. This was where it broke the first time. And so when price just came into the same area. So it became the breaker block for price to go up. So it was like demand for price to go up. Although most times breaker block is not a good enough place to use for long-term holding demand because sometimes it fails. Look at this now. We had the breaker block here. Price tapped into it, went up a little bit, and then just dumped and took everything. And then price now had to come into the real area of demand, which was here. Which was here. And from there, it was able to continue do all of this.
That's true.
Tap,
That's true.
tap, tap, and all of that. So sometimes breaker block is not advisable. It's not advisable at times, but it
Is
can be useful in many situations.
what's the difference between breaker block and then other block? Is it that other block is your demand area and then breaker block is what you just said?
Other block is visible. You can see other block and point to other block like, okay, this is other block. But breaker block is invisible. You have to like draw it out. So for other block you can see this one now. This was the last sell before price bought. This was the last sell candle before price bought. So you
Yes.
can say that, okay, oh, I want to use this one. That is another block. That means that where an order is still resting. That means a buy order is still resting there. That is what it means. That a buy order is resting there because why? We were able to overlook what the sellers were doing and we just bought straight away.
Yeah.
One, two,
But
three, bought like that. So you might even say that this is an inducement because this is a demand that has not been triggered. So we just wait for price to come there and see what happens there. So that is another block. But for a
okay.
breaker block, you have to draw it out because you have to see an area of demand or supply before you can actually start talking about breaker block. So like this,
Okay.
we have all of these people buying, 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 buying. This one was the supply that was holding them. Can you see my screen?
Yes,
This
sir.
one was the supply that was holding all of them. There was this rejection, rejection, rejection everywhere, and the price broke. It broke through it. It broke through that supply. And so this supply that we have, we can now draw it out to extend and we can use it as a breaker block. Because why? That was the block that was broken. So we will now use that same block as a
Okay.
demand. So price can enter inside there. And that is that. So that is just what breaker block is. There are more and better examples of
Okay,
breaker
sir.
block. Let me check if I can find it on US 30. See. There have been situations whereby we use breaker block as entry. Okay, something like this is not so bad. We had all of this happening, all of this rejection from here, rejection from here. We broke it. Normally, price should react from it, and it actually did a little bit. Reacted from it. All of this here, you see this rejection. All of this here, it reacted a little bit, and then it broke it. And so when we came around the next time, it still was useful for us to enter. It came there, did not even come there fully, but
Mm,
uh,
didn't touch it fully.
we just touched it a little bit and then ran off from there. To find an entry using this kind of area will be very, very tricky because you will need to be very, very, very sure of where your buy entry should be and where your sell should be and where your stop loss should be. Because if you don't have that, then that will be trouble. There was a supply here too. Price went up from there. Although in this kind of case, price came for the demand. Price came from the demand, the one that was responsible for the whole thing. Because price swept and broke. That was down. Let me see if I can find another breaker block. US 30 is a very tricky pair. If somebody is just coming into the market and they say that they want to start trading US 30, hey, the first shishige for the first 2 or 3 months. So, but
So, what
the advice that
the
you would give to
advice that you would give
someone
to
like me that will start
someone
in
like
the me
me that
future
will start in the
should
future
stick to, is it Great Britain
should
pound?
stick to, is it Great Britain
Just stick
pound
to all those forex pairs.
or
Forex pairs are not so volatile. Forex pairs are not so volatile as much
okay.
as US 30 and Nasdaq. Dow Jones and Nasdaq, they are very volatile pairs. You can still be safe while trading Euro USD and GBP USD. Okay, we had something here. So a friend of mine who is also a trader was talking to me about Euro USD buy. And this time, one time later, I was now going through my trading view and I just saw somebody send a chart of Euro USD. And immediately I saw it, I knew I had to go look at it. That was the one I used to do my first video. So we saw all of this rejection here.
Mhm.
So that means there was one supply that price was reacting from. So that supply cannot be confirmed until we see the first rejection. Price broke through it. It broke through it. Yeah, it broke through it. You see the supply. You see that.
Yes.
So we had all that
Yes.
supply, and the price broke through it. Then this one came back and tried to touch it and failed, and then it went up. We don't know where the supply is, so but we can identify the breaker block. We shall know that this was where the supply around the area where supply was standing, because this is the tip. This is the general area where the rejection was occurring. So we can draw our box, draw it to the top of this place like this, and then we can put the tip top of the box around here, because why? There was a reaction 1, 2 here before price moved from there. And so when price came back, it tapped into this place as a breaker block. You see that? So it tapped into here as a breaker block. Even if you put
Yes.
your box like this, in this case, it still came inside. Or you say that, okay, I want to use the tip of this one. I use it as my the top of my box. It still came inside. So breaker block is just when we've had a supply fail. When we've had a supply fail, the candle that broke that supply can be used as a breaker block. So the candle, this
Yes.
particular candle was
Yes.
the one that broke. All of them had been rejecting. They'd be saying, ẹ̀rù ń bà mí o, mi fẹ́ lọ o. Then this one came and then it broke through. So this one broke through. And when it broke through, we saw that okay, there was a confirmation of that area, and we were able to draw our breaker block around there. And so price used it. It's continuing from there. I'll tell you that this thing failed. Do you see? Because it can't be used again. It can only be used once. It can only be used once. I said
What did
it
you say, sir?
failed. You can only use it once. You can't use it twice. Do you see? So if
Okay.
you are still
Okay.
holding your position here
Yeah, I can see.
and you are saying, okay, I want price to go to Valhalla or I want price to go to the moon, you will just see yourself taking out.
And come back.
If you are not taking out here, you will get taken
Mm.
out here. Because this one will take you out.
Yeah,
So
that's true.
and after all of those takeout, price continues to go up. So breaker block is just something that you can use once. But in demand zone, price can use it multiple times. Price can use it multiple
Yes.
times. I use the demand zone multiple times. Price can touch into it the first time, touch into it the second time, touch into it the third time, and move back from there. So that's just the difference between supply and demand. Other block two, other block is something that I think can only be used once too. You can't be using it twice. So it's only like when you see an area of supply, or sorry, an area of demand, you've seen a demand that has tapped, this one tapped into this one tapped into this one tapped into this. That is your demand zone. Let's say this one now. This one tapped in here, and then this one came and tapped inside here. So in that example, you say that this is our demand zone. Okay, this is our demand zone. Price might decide to come
Yeah.
there as many times as it likes, and probably might use it as a demand zone. So that's just it. That's the difference. Is there anything you don't understand that you want me to put?
Yes.
Is there anything you don't understand that you want me to go over?
I understand what you just said, and I will go through video
Okay.
once you send it to me. I don't know how you want to do it.
I know you are confused. I can see it in your face.
No, no. Like you just explain the other block, the breaker block. You like what I understand from there is that you can get breaker block from supply,
Yeah. Or you can even get it from
the area
demand.
of supply where the demand broke out.
You can get it from supply, you can get it from demand. Where demand fails, you can get a breakup block.
From demand.
Where supply fails, you
Yes, from
can get a
demand.
breakup block. Mm.
You can get the breaker block. Then for other block, for demand, I know I can get demand. Then for other block, the other block now, uh, is other block not the same as where your demand has shifted to?
Not really. Other block is the last sell candle before you buy. It can only be used once.
Okay, that's true. Strong
Only be
entry
used once.
after
For example, this is another block.
rejection.
So it's another block. In all of the sale that we had, price was selling. And then this was now the last sale before we had a buy. See that every candle that followed there was just green candle. So all of these buys happen
Yes.
after this one. So this one now becomes the other block. Because why? That was where the buy began from. So we still expect that there will still be some volume, some amount of money that is still there. That when price goes back there, it can still pick it. The reason why they call it other block is because it is carrying an order or a lot of orders. So if it is this kind of situation,
Okay.
we call it a bullish order block. Because why? This is where the momentum
Okay.
changed from bearish to bullish or from sells to buys. And so the person who started to buy from here,
Okay.
he will still have some amount of money left here. That price will come into so that it will pick its order and price will continue from there. So that is just
Okay.
what order block is. But the
Okay.
thing is, order block is not sustainable as much as supply and demand. Order block, breaker block, all of the blocks, they are not as sustainable as supply
Okay.
and demand itself. And supply and demand is like contracted. It's like a baton. So they pass the baton to each other. That is where you can trust something and say that, okay, this
Yes.
is demand, this is supply. So that is just the way it is. It's,
Okay, sir.
this one will
Thank you,
still
sir.
fail here. Because price cannot come back there and use it a third time or a second time. In fact, it's even a third time. I know it's a third time. So price will very likely go like this and take it out. And then probably come here to continue. So that is just the differences between the three. I guess when you go through the video, you'll be able to understand it better.
Yes, sir. I'll go through it. Yes, sir. I'll go through
You
it.
know
I'll
the
go through
videos
it
that I
again.
put on that YouTube channel?
Yes.
They were videos that came from my hunger to like just make people understand this thing. And that was why I put down market structure, I put down top-down analysis, I put down price action, I put down all of those videos. I haven't had time to create new videos I would have
Yes.
because I wanted to create a video on liquidity, I wanted to create a video on mitigation, I wanted to create a video on supply and demand too. But supply and demand is just subjective to market structure and liquidity. So I wanted to create more videos and I will still create them. But
Okay, sir.
when you go through this video, I believe you'll be able to understand the other concepts better. Yeah.
Okay, sir. I appreciate, sir.
I think I left you unsatisfied, but there's no problem. You write your questions down,
No.
and in the next session you just. Uh-huh.
Yes, I will. I will take that. I'll put
So
that
you
in
just
any
tell me.
question I have for the next class.
And then I
I will, and
once you
then
have
I
showed
will.
me where I
Once you
can
have showed
use
me where I can use
to
uh,
activate
to
my
activate my
my trading view, my
my
phone. Yeah.
trading view on my phone, I will use
Use it
it.
to do these things.
I will use it
Send
to
you.
do those
Soon
things and
enough,
send
I will
it.
have to tell you to demo trade one of these days so that you just use fake
Oh,
money. TradingView has a demo trading activity, so you can do that there. So, but for now, you can just highlight the other blocks or the breaker blocks or whatever that you can notice from all of this. So
okay.
you can also do more research and find out what demand and supply is, because the assignment usually makes it much better.
Okay.
So at that time, you are able to understand fully what supply is and what demand is. So understand
Okay, sir.
areas of subject of secondary demand or secondary supply. Those other blocks and breaker blocks, they are areas of secondary demand. They are not primary demand.
Oh,
So they are just secondary
okay.
demand. So they can only be used once. But when we talk about real demand can be
Yes.
used over and over a few times, unless we see something that shows us that okay, this thing might not work this time around. You see that this demand was used over and over. Was used
Yes.
over and over.
Yes.
We came there the first time,
Mm,
price tapped into it,
it's true.
it went back. Second time, price tapped into it, it went back. Third time, price went back into it, and from there it started to go up. So there was a demand here, and that was what price was reacting from. This one it started from here, and then it went up here, and then price picked it from here, and so it began to distribute everything. So it might not be too clear right now, but for the fact that price was using it over and over, tells us that we have uh, demand there. There was a sweep, there was another sweep. Price came back, touched into this, and broke. So the demand here, precisely here, precisely here. Price reacted from it. I think that was the eventual one that price reacted from before it went up. Eventually, yeah, that was where it came into. It went up eventually. This one too was part. What is this thing? This one too was part. Because this one contracted. So when price had to
Okay.
go up, this one,
Okay.
eventually this one tapped into it and moved off from there. So uh I don't want to confuse you too much. So soon enough we will get to all of this and you'll be able to know what they
I'll,
are and understand them and get them. So I think we can wrap up the class here. It's almost 5 o'clock.
yes.
So I guess we'll see on where's that Saturday, yeah? Yes, sir. Okay.
Yes, sir.
See you
Thank
then,
you, sir.
sir.
Thank you, sir.
Yes, sir.
I really appreciate